Okay, so today we're going deep on something that's pretty crucial for anyone who's ever, thought about getting a loan or a credit card in India. We're talking about the CIBIL score.
Yeah, it's one of those things that you hear about all the time, but maybe don't always fully understand, right?
Exactly. We've been digging through tons of reports and articles, really trying to break down the CIBIL score and how it works. Basically, we're aiming to give you the need-to-know info so you can really grasp this whole credit score thing.
Think of it like this. We're giving you a crash course in all things CIBIL. So what is a CIBIL score, really? I mean, we throw the term around a lot.
Right, it can seem a bit mysterious.
It is. It's basically a three-digit number, somewhere between 300 and 900, and it's all based on your credit history.
And where does that history come from?
That's where your credit information report, or CIR, comes in. It basically tracks your borrowing and repayment habits across different loans and credit cards. But here's the thing. It doesn't include things like savings and investments. It's all about how you handle credit.
So a higher score means you're good at handling credit, right?
Exactly. A higher score means you're less risky for lenders. It's kind of like your financial report card in a way.
Okay, so for our listeners out there, why should they care about this CIBIL score? What does it actually impact?
Well, think about it this way. When you apply for a loan, or even a credit card for that matter, the lender, the bank, or whoever it is, they're going to pull up your CIBIL score. It's like their first impression of you financially.
So it can actually affect whether or not you get approved.
It can, absolutely. Not just approval, though. It can affect the interest rates you're offered, how much you can borrow, even your credit limits. It's a big deal.
Huge deal. So let's go back in time a bit. How did this whole CIBIL thing even get started in India?
Well, the idea of formally assessing credit in India, using these kind of standardized methods, it really took off in the early 2000s when credit bureaus started popping up. CIBIL itself was established way back in August of 2000 based on recommendations from, folks who wanted to streamline credit evaluation.
So CIBIL was the first on the scene.
Yeah, they were the pioneers, India's first credit information company. They actually partnered with TransUnion, a global credit reporting agency, and a bunch of Indian banks to get things rolling.
And when did they actually launch the CIBIL score itself?
So they launched the Consumer Bureau in 2004, followed by the Commercial Bureau in 2006. And then finally, in 2007, they rolled out the CIBIL score as we know it. It was India's first generic risk scoring model. Pretty groundbreaking at the time.
It really was. Now, I know a lot of people are curious about the actual calculation of the CIBIL score, how it all works behind the scenes.
Yeah, no, everyone wants to know the secret formula.
Right.
Well, it's a closely guarded secret. It's based on a proprietary algorithm, so the exact details, they're confidential. But we do know the biggest factor is your payment history on loans and credit cards. That's really the cornerstone.
Okay, so if I always pay my bills on time, that's a good sign for my score.
Absolutely. Payment history accounts for about 35% of your score. That's how important it is. Shows lenders that you're reliable and responsible.
Got it. What else plays a big role in the calculation?
So right after payment history, you've got credit utilization, which accounts for about 30% of your score. And that's basically how much of your available credit you're actually using. Experts usually recommend keeping it below 30% just to show you're not maxing out all your cards and loans.
That makes sense. So not living on borrowed money all the time.
Exactly. And then you've got the length of your credit history, which is about 15% of the score. The longer you've been responsibly managing credit, the better. It shows you've got experience.
So it pays to start building credit early, I guess.
In a responsible way, yeah, absolutely. Then there are new credit applications. Those count for about 10%. Applying for too many loans or cards in a short span of time can actually make you look riskier to lenders.
They might think you're desperate for cash or something.
Exactly. And lastly, there's your credit mix, which also makes up about 10% of the score. This means having a good balance of different types of credit, like secured loans, unsecured loans, credit cards, and things like that.
So basically showing you can handle a variety of financial products responsibly.
Precisely. Now let's get to what these scores actually mean for you, in real life situations. What do they translate to?
Yeah, because a number is just a number until you know what it means in the real world, right?
Right. So scores generally range from 300 to 900. Anything above 700 is considered good, and if you're up in the 750 and above range, that's excellent. You're basically a golden borrower.
So golden borrowers get the best deals.
Pretty much. They've
Yeah.
got a higher chance of approval, they can often negotiate better interest rates, and they get more favorable terms overall.
What about those who are below that 700 mark?
Well, if you're below 685, it might be a bit tougher to get approved for credit, and below 650, it gets even more challenging.
Oof. So what about those with really low scores?
Well, scores below 600 usually have a pretty low probability of approval, and anything from 300 to 579 is considered poor or bad credit. There's also -1, which means you have no credit history at all, and 0, which means your history is limited, probably less than 6 months.
So let's say I'm applying for a loan. How does my CIBIL score actually come into play during that process?
It's usually the very first thing a lender looks at. If your score is low, they might just reject you right off the bat without even considering other factors. But if you've got a good score, they'll take a closer look at your application and your financial situation.
So CIBIL doesn't actually make the decision to approve or
No.
deny loans.
Nope. That's up to the lender. But the CIBIL score plays a huge role in their decision-making process.
Okay, so good scores generally equal better interest rates and loan terms.
Exactly. A good score is like a bargaining chip. It can help you get a lower interest rate, which means you'll pay less over the life of the loan. You might also be able to get a higher loan amount or a better repayment schedule.
So it's not just about loans and credit cards anymore, is it?
No, it's not. CIBIL scores are becoming more important in other areas of life, too. Landlords might check your score before renting you an apartment. Some employers in the financial industry might consider it during hiring. And even insurance companies might use it to determine your premiums.
Wow. It's becoming a pretty big deal in a lot of different areas.
It is, and this is actually good news for people with good CIBIL scores.
How so?
Well, a good score means you're more likely to get approved for things, you can often get better deals, and it can even speed up the whole application process. You might even get pre-approved offers from lenders, which is always nice.
So it's like having a VIP pass in the financial world.
Kind of, yeah. And all of this is actually contributing to greater financial inclusion in India.
Really? How is that?
Well, with the rise of digital platforms and more awareness about CIBIL scores, people are becoming more educated about credit, even in rural areas. We're seeing more women actively monitoring their credit scores, which is fantastic. And there are initiatives to help first-time borrowers build good credit habits right from the start.
That's great to hear. But I've heard that in the early days of CIBIL, not everyone was on board, especially banks. What were some of the initial concerns?
Well, back then, there were definitely concerns about the availability and accuracy of data. Credit information was fragmented, and a lot of people didn't have much of a credit history to begin with.
So it was like starting from scratch in a way.
Yeah, pretty much. And there was also the challenge of building trust in this new system. It took time for people to understand and accept the idea of a credit score.
And I'm sure navigating the regulatory environment and ensuring data security were big hurdles too.
Absolutely. Those were major priorities from the get-go. And then there's the fact that India is so economically diverse. It was a challenge to create a single scoring model that would work fairly for everyone across the country. Plus, a lot of banks already had their own internal credit assessment systems.
They were used to doing things their own way.
Exactly. So, yeah, there were definitely some growing pains in the beginning.
So who's in charge of CIBIL now? Who owns and operates it?
Well, since 2017, TransUnion, that global credit reporting agency we talked about earlier, they acquired a majority stake in CIBIL, making it TransUnion CIBIL Limited.
Okay, and what exactly does TransUnion CIBIL do?
Well, they're licensed by the RBI, the Reserve Bank of India, as a credit information company, or CIC. Their main job is to collect and maintain credit-related data for both individuals and commercial entities.
So they're like a massive financial database.
Pretty much. They've got a huge network of member institutions, including banks, NBFCs, financial institutions, all kinds of lenders. They basically gather information from all these sources and use it to generate those CIBIL scores and credit reports.
So how does all that data actually get to CIBIL, and how often is it updated?
Banks and other lenders regularly submit data to CIBIL, including details about your loan accounts, credit cards, payment history, even personal information like your name, address, date of birth, PAN number, things like that.
They submit everything.
Well, all the relevant stuff, yeah. And historically, this reporting was done on a monthly basis. But recently, the RBI mandated more frequent updates. So starting in January 2025, they'll have to submit data every fortnight, within 7 working days of the 15th and the last day of each month.
So things are getting even more up to date.
Exactly. And they use a standardized format like the CIBIL Tarif, the TransUnion CIBIL data format to make sure everything is consistent and accurate.
Makes sense. With so much sensitive financial data being handled, security must be a top concern.
Oh, absolutely. It's a huge priority for CIBIL. They're ISO 2701.2005 certified, which means they meet international standards for information security management systems. They also strictly adhere to data protection laws and RBI guidelines, with a strong emphasis on confidentiality, integrity, and security of data.
So they've got multiple layers of protection in place.
Exactly. They've got a comprehensive privacy policy that outlines how they collect, use, and protect your information. They also provide guidance on creating strong passwords, monitoring your credit report regularly, and they even send you notifications via SMS or email whenever your credit report is accessed or updated.
That's reassuring to know.
Yeah.
But even with all these safeguards, there are always some criticisms, right? No system is perfect.
That's true. And the CIBIL system has had its share of criticism over the years. One of the biggest concerns is the lack of transparency in the score calculation. The algorithm is a trade secret, so people don't really know exactly how their score is being determined.
So it's a bit of a black box.
Yeah, kind of. And there have also been concerns about the accuracy of credit reports and how errors are handled. Sometimes there can be inaccurate reporting, data discrepancies, delays in updates, or even difficulties in getting errors rectified.
So it's not always smooth sailing.
No, it's not. And some people argue that the CIBIL score has a limited scope and predictive power. They say it tends to penalize negative events more heavily than it rewards positive behavior, and it doesn't provide a complete picture of your overall financial health.
So it might not tell the whole story.
Right, and it can also be a bit unfair to those who have limited formal credit history or those who are new to the credit system.
They might be penalized for not having enough data.
Exactly. And then there's the issue of potential bias and discrimination. The CIBIL model might not fully account for the unique circumstances of vulnerable groups or external factors that can impact their creditworthiness, like delays in government subsidies or things like that.
So it's not a one-size-fits-all solution.
Definitely not. And finally, there's concern about over-reliance on CIBIL scores by lenders. Some people worry that lenders might focus too much on the score and not consider other important factors like your income, expenses, or overall financial stability.
So it's a powerful tool, but it needs to be used responsibly.
Absolutely. It's not meant to be the only factor in financial decision-making.
Right. So to wrap things up, the CIBIL score is definitely a key player in India's financial landscape. It has a huge impact on our access to credit, and it can affect our financial lives in many ways. While it offers a lot of benefits, there are also some areas that need to be addressed and improved.
I agree. It's a constantly evolving system, and there's always room for improvement.
And on that note, here's a thought for our listeners to ponder. As credit scores become more integrated into different aspects of our lives, beyond just lending, how can we work towards a more comprehensive and transparent credit assessment system that serves everyone fairly and effectively?
That's a great question, and something we should all be thinking about as we move forward in this increasingly credit-driven world.
Absolutely. Thanks for joining us on this deep dive into the CIBIL score. We hope you found it informative and insightful.
And remember, knowledge is power, especially when it comes to your finances.
Until next time, happy borrowing.
And even more importantly, happy repitting.